Welcome to Mad Money. What do Egypt, Italy, Ireland, Greece, Spain, Portugal all have in common? The answer is that none of them have caused the end of the world as we know it. And that's what I thought about today. A day when the market seemed to cling on every word out of Egypt. That's probably right to do. Yet we still had a remarkable run into the close. S&P gained 0.07%, even though we knew that Mubarak said he's putting up a fight. NASDAQ rose 0.05%, even though Cisco blew up, while the Dow Jones finally snapped its winning streak. It still closed only down 11. Right at the time when the Egyptian president decided to stay in office and delegated some power to his VP rather than abdicate. So the uncertainty continues. As trying as it is for this sword to still hang over the market, it is simply not a sword that I think can take down the earnings of the companies that are reporting. And that, not Mubarak, should I stay or should I go dance, is what determines the true direction of stock prices. The clash may be the only band that matters, but they don't matter to the stock market unless something much bigger happens, a conflagration that spans all of the Middle East. And as of tonight, I am still not seeing that. But let's go back in the Wayback Machine for a moment. First, let's set it a year ago. Remember, that's when we were first learning that there were a group of countries known as the PIIGS. Not BRIC, Brazil, Russia, India, China, but the PIIGS, Portugal, Italy, Ireland, Greece, and Spain, that we were told ad nausea could bring down the banking system of the whole Western world. We endured gigantic sell-offs because of the problems of the PIIGS, including, people often forget, a humongous drop that came and was right before, maybe even the proximate cause of the craziness, the flash crash. In response to the violent demonstrations in Greece. Those were on while I was on with Aaron Burnett when it happened. People sold every kind of stock, not just the banks, but the oils, the techs, the healthcare names even, on worries that the PIIGS would crush the world's financials. What went wrong? What went wrong there with the Armageddon thesis? Turns out that our nation's banks were much better capitalized than we thought, courtesy of the Treasury Department's tough stress tests. And the IMF stepped up and bailed out Greece at a steep price. But it worked. Now, go back 2 weeks ago. The market took a total header when the demonstrators shut down Cairo, demanding that Mubarak step aside, new government be formed. I can't tell you how many powerful money managers, hedge fund managers, and mutual funds jumped on the end of the world thesis like that, selling, shorting, buying put options against the stock market. Their logic? How could the overthrow of a major country, 80 million people, not bring about a catastrophe for everything, all kinds of companies? How could it not wreck the earnings of hundreds of businesses, cause people to flee into cash, as they did 2 years ago when we were faced with a similar financial Armageddon? In fact, that was really the issue. We had learned our lesson all too well, which is that when the news flow is bad, you head to the hills. That was the lesson of 2008. 2009. Except there was a problem with the doomsday thesis, just like the problem with the PIIGS. You got to know what kind of market you're in. This is a market where the corporate earnings are on fire. They're not falling off a cliff. And they will be on fire irrespective of who leads Egypt, Mubarak, the army, or even to an extent a caretaker government that ends up being a prelude to an Iranian-style revolution. Now, understand, not all countries are created equally. If we were to get a revolution in Saudi Arabia, I'd be doing a completely different monologue here. We get a new government comes in, slaps an oil boycott on the United States. Then you see oil soar back to 140 like in 2008, because we're not energy independent. We would have a petroleum-based recession. We had a couple of those in the 70s. We could not minimize that potential economic catastrophe. But that's the Arabian equivalent of the PIIGS infecting Germany and France with swine flu. It was the knee bone connected to the leg bone theory that made us believe that the whole European edifice would come crashing down, including the currency of the euro, which was written off at 118 against the dollar, because of a few marginal economies. Just like the bears presume that as Egypt goes, of course the Saudi kingdom goes. What should we have been thinking? We should be thinking, okay, let's say it is just Egypt. That only means we have to get out of Egyptian companies and those that do a ton of business in Egypt. But there's not much more pin action off Egypt than that. Because remember, what we have to do, we have to ask about the earnings impact. How do we arrive at stock prices? That's the earnings time the multiple equals the price. The E. Do you think Egypt has any earnings impact on Chesapeake, the natural gas company we like so much? How about impact on 3M, the cereal dividend raiser? How about Disney? There sure was a stock impact on Disney. 2 weeks ago, it dropped very quickly from 40 and change to 38. That was right before it reported. But you should have been thinking, I want those 5 points. I want the points after the report. You should be thinking, the pyramids. Nah, not part of Disney World. Maybe not even part of Epcot, Magic Kingdom. The Sphinx, not a ride. Not that I recall. Although the Matterhorn, that's a different story. You see, it's a large world after all. What's the bottom line? Simple. When people say it's the end of the world just because of some financial or governmental upheaval, you need to put that event into the perspective of earnings. And if there is no impact, or if there's a chance that something can go right, perhaps you should think twice before you bail on stocks. Instead, maybe you should be ready to pounce when others panic, like on the Disney. Because alas, nobody ever made a dime panicking. And this Egyptian upheaval will prove to be just one more occasion, I think, where panic hurt, not helped your own bottom line. Let's go to Steve in Florida. Steve.
Hey, Coach Jimbo. Happy birthday.
Oh, thank you very much, Steve. I much appreciate it. Thank you very much for remembering.
A sincere thank you for helping all of us home gamers.
My pleasure. Thank you very much.
Become a bit wealthier. We appreciate your efforts very, very much.
Oh, you're too kind. This is what I think about when I do this show every night.
Well, it's greatly, greatly appreciated.
Thank you.
As well as your team helping you as well.
They're fabulous.
Tim, I've owned Devon Energy since about June of 2010. I invested in it because I believe it's a well-run company, and also because of its concentration in more localized areas here in the U.S., Canada, with its exploration efforts. We also see it as a safer bet, especially when you realize what's going on over in Egypt, et cetera.
Right.
Right now, we're up about 25% so far, which is great. And we just wanted to know, should we hang in with Devon or should possibly roll out of that?
Here's what you do. You got the right guy. Steve, here's what we do. All right. In the book, Stay Mad for Life, I detail a way to be able to scale out of situations after you have a big gain. I say that after a 25% move, you should literally cut back a quarter of the position. So what you'll do tomorrow is you'll sell a quarter of what you own in Devon. You'll take that off the table, and we will either wait for Devon to come back down, and you know I like Devon. It is all North American oil and gas. But we'll just keep that on the sidelines. Maybe we catch another big panic in Egypt, and we can put that money to work. But I want you to ring register on 25% tomorrow morning. Alex in Massachusetts. Alex.
Happy birthday, and booyah, Jimmy.
Thank you, Alex. Thank you very much.
Thank you. I know you like BTU, but I own Massey and eventually Alpha when they merge. So what's your view on the sector, especially on Alpha, short and long term?
Okay, I think that you need to ring the register because I think that is not my favorite. What you really want to be looking at right now after that combination, is that you should be looking at the growth coal play. I urge you to go and listen to the BTU, that's Peabody Energy conference call, where the CEO talks repeatedly about the coal super cycle. Let's go into growth coal. Congratulations on that huge hit with Massey. That was well done. When everyone is saying the world is ending, you know what I want you to do? I want you to take a breath. I want you to look at the facts. I want you to think, how could it impact the earnings? And then, if it's going to obliterate the earnings, you're free to sell. Otherwise, what are you doing? Mad Money, be right back.